Hello and welcome to this January 20th, 2011 video version of InvestEd Central's Chart of the Day. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at CREE Inc., ticker symbol CREE. This is about a $5.8 billion technology company. It's a semiconductor stock, and we're doing something a little different today. This isn't really designed to point out CREE as a possible trading candidate. Rather, what we wanted to do was just point out one of the risks that we talk about in terms of trading, holding into earnings. One of our philosophies at InvestEd Central is not to hold a stock into its earnings report. The reason being, we've seen stocks that trade very strong technically all of a sudden come up with a major disappointment. Even though we feel like that's probably rare, it does happen from time to time. And sometimes you have a stock that's weak and you might think that you might want to short it going into its earnings reports, but then you'll see a much better than expected report and a gap up to kind of squelch those negative technical indications. So as we approach earnings season, one of the things that we always tell our members to do is to keep an eye out for earnings report dates. Know the stocks that you own and when those stocks report earnings. If you choose to hold a stock into earnings, that's fine. It's completely up to you. It's your call. But we don't believe in it because we do think that it's kind of like a coin flip. And to us, the odds of a coin flip are 50-50, and those aren't the kind of odds that we want to be involved with. We'd like to try and get the odds turned a little bit more in our favor. But looking at CREE, you can see that the stock had made a huge move up off the bottom in October. It ran from about $48 a share up to $72. So the stock in about 7 weeks ran up 50%. So it tacked on 50% to its market cap over just a 7-8 week period, and then had a normal pullback back to its 50-day moving average. I actually made the comment in our chat from a day or two ago that I thought CREE would probably gap up, and I did point out that it was a guess, but just based on the fact that technically it had looked pretty strong, we had pulled back, we were down close to the 50-day moving average, I wouldn't have been surprised to have seen a $5, $6, $7 gap up with CREE looking at the chart, but instead stock gap down $10, $9. So this is the type of risk that you face when you hold a stock into earnings. Another reminder, really big reminder, not to hold stocks into earnings came on Wednesday night after the bell when F5 Networks reported its earnings. The stock closed, I believe, at $138 and change. And after hours activity, by the time the after hours activity closed at 8 p.m. Eastern, F5 was trading down to $107 and change. So $31 the stock lost after it reported its earnings. Those are the types of losses that are much more difficult to recover from. And it's one thing if a stock comes out and warns and you don't see it coming, it just comes out of the blue. It's another when you decide to hold into earnings. You know that there's the possibility for a big disappointment, and if you choose to take on that risk, you just have to understand that it is truly a risk and one that we prefer not to take. But anyhow, we wanted to pass that along just as a subtle reminder that we are in the midst of earnings season. We're starting to get a number of earnings reports out. We're going to see a lot more over the course of the next few weeks. So please check the earnings dates on your stocks and then make a decision whether or not you choose to hold a stock into its earnings report. Best of luck and happy trading.